Hi, today we are talking about AU Small Finance Bank. This entity has been an expensive stock ever since its inception, but investors have made good money in the stock. In fact, it has outperformed the Nifty big time in the past 1 year, and in the last 1 month also, it has given a return of close to 16% to the investors and is whisker away from its 52-week high prices. So the key question is, at this level, should investors look at AU Small Finance Bank for a rewarding journey in the future? The answer is yes, and we will tell you the reasons why. So first, let us turn to the key positives of AU Small Finance Bank. The bank is building up a granular and diversified asset book. Although the growth seems to be slowing down in the overall growth in the assets under management, but the quality is improving. About 79% of the book comes from retail and about 95% of the book is secured. In fact, even in terms of the disbursement growth, the growth is being led by retail assets. There has been a steady improvement in margin. In fact, in the quarter under review, the margin improved by close to 30 basis points to 5.3%. The growth in retail assets, where the yield on advances is higher, coupled with higher share of deposits in the total borrowing, has helped in improving the net interest margin, and we expect the trajectory to continue. Coming to the liability, which is the deposits, that is a key driver of profitability and is going to remain a key driver for profitability in the future. Deposits, which was funding only 53% of the advances in the year ago period, now funds close to 74% of the advances. Ever since its inception as a small finance bank, the growth in deposits has been 1.15 times of the growth in advances. Hence, all incremental advances have been actually funded by deposits. Finally, the bank is going to see moderation in cost because it had upfronted cost at the inception of its journey, and the moderation in cost to income ratio should be a further kicker for earnings. Now, let us turn to the key negatives. A slowing macro definitely impacts all financial services company, and AU Small Finance Bank is no exception. Although given its smaller size, it will get less impacted by the macro headwinds. However, a severe slowdown in the macro could impact the growth in its loan book and could also impact its asset quality. Finally, AU has exposure to some of the troubled sectors like NBFC, which is to the tune of 9%, and real estate to the tune of 3%, although they are pretty secured at this point of time, but needs close monitoring. The question is, what should investors do with AU Small Finance Bank? The stock has had a stellar run. We had initiated coverage on the stock in February, and since then the stock return has been close to 39% as against a Nifty return of close to 10%. The valuation is definitely not undemanding at 4.9 times FY21 book. So, we do not expect a valuation re-rating for the stock. However, the stock performance would closely mimic the earnings growth, which we expect to be extremely encouraging. Hence, we advise investors to buy into AU on every decline. Thanks for watching.